Good afternoon, everybody. My name is Mike Keating, and on behalf of the MGAA, I'd like to welcome you all to our market briefing, which today I'm delighted to say has been delivered by Grant Thornton. Before I hand over to our presenters, if I may, I'd like to run through some housekeeping points. Firstly, could you please ensure your microphone and cameras are off? If you would like to ask a question, and given the importance of this topic, I'd really encourage you to engage with any questions you may have as we go through the presentation. Please use the chat button at the bottom of your screen. Your questions will be answered at the end during the Q&A session and will remain anonymous. If we do not get time to answer all the questions, then we will talk to Grant Thornton and we'll address those post the event. The MGAA's Programme of Learning and Insights has been accredited by the CII for the quality of content and supporting materials, with CPD hours applicable if relevant to your ongoing professional development. The recording of this market briefing will be available within your members' dashboard and the PowerPoint presentation to follow post-event. Finally, and most importantly for the MGAA and Grant Thornton, you'll be sent a feedback survey. Please take time to complete this. It should take no more than 2 minutes, as this allows us to ensure that we deliver both the quality and the relevance of briefings and events. Okay, so let me be delighted to introduce our two presenters. Firstly, I'd like to introduce Nasheen Hassan, who is Risk Assurance Director at Grant Thornton, and Priya Prakash, who is Associate Director and Operational Resilience SME. Ladies, let me pass over to you.
Thank you very much, Mike. Hopefully everybody can hear. Okay, so big topic, operational resilience, as you all know, and upcoming deadlines for March this year. We are working with a number of firms in the insurance industry in this area, and more and more now is the interest in how this will be applicable for cover holders and more so the dependencies, which we'd like to talk through with you. Right, so I'm going to dive into the slides. So the content for this webinar is we'll go through the effectiveness of a delegated authority framework. Many of you will already know this, but it's really just to refresh the memory and go through some specific aspects which relate to operational resilience. I will then pass over to my colleague Priya Prakash, who will talk through operational resilience for cover holders, some of the things that we're seeing and what needs to be considered. And then at the end of the session, there will be a summary and some time for Q&A. So what does an effective delegated authority framework look like? What I want to cover is just, first of all, to let you know that this is not an exhaustive list. This is only the key components that we have to consider. Otherwise, we would be here in another webinar ourselves, separate. So it really, what does a delegated authority refer to? Refers to a managing agent when they delegate their underwriting authority, they enter into contracts of insurance to a third party, essentially. And as part of this arrangement, you have to make sure that you have an effective framework and ensure also that it remains resilient at all times, be it in the event of business disruption, be it when, you are just making sure that your operational activities are in sync and delivering to your customers and your clients. Very, very essential. The key components of this really in terms of the framework itself is ensuring that you have an effective delegated authority strategy in place and procedures are accompanying that. Well, what does that mean? First of all, as an agent, you'll need to make sure there is a strategy there, and even the cover holder maybe has a strategy that is aligned to the MGA. And within that, you would want to flesh out the dependencies that you may have on cover holders. So some agents have very key dependencies on their cover holders, very, very large, right, huge amounts of business. What will that look like if, for example, that cover holder were to fail or there was to be some disruption? So what, and you need to kind of highlight the extent of that dependency in your strategy. Then I guess in addition to that, what the backup plans would be is, and often people don't consider this, they kind of delegate to the cover holder and they think about, okay, not really thinking much about backup plans and their BCPs. They think more so about their own BCPs. But what about your third parties? Because essentially, cover holders are our third parties, right, to, in the Lloyd's market, well, in this delegated authority umbrella. So the inclusion of resilience, the extent of dependency in the strategy is important. Then you should have procedures for onboarding your cover holders, and as well as onboarding, exit planning is also very, very important, which is something that, again, often people seem to miss. You want to make sure that there's general good practice and there's a smooth running of those operations. And when it comes to any exit arrangements, it's a smooth transition and a good end of relationship arrangements in place as well. The other thing really to consider as part of that is whether the cover holder has a business plan. Does it look reasonable? Will they be able to deliver what they are saying that they will be able to deliver? And how will the MGA be assured that this is going to happen? What happens if it's not delivered in accordance with expectations, and what is that going to look like? And what level of assurance do you have to ensure that that is going to happen on an ongoing basis? That then brings me to onboarding and due diligence, which is also a very key component of the framework. And I guess one of the things that, you probably have to consider is whether there is an effective criteria or an approval matrix, which is decided on each of the cover holder arrangements. Moving forward, who has the authority, and the underwriter, maybe at the NGA, who will approvals come to if, and then do they need to go to any governance forums for full transparency? And then in line with that, then the internal risk assessments that really should be taking place of what are the risks that are being faced by that cover holder, again, lying to dependencies, and then what are the mitigation strategies of proceeding with that cover holder and taking that resilience of the cover holder into account, and whether also they have the suitable skills, knowledge, expertise to be able to effectively deliver what they say they are going to deliver to you. So I guess one of the key elements of that is making sure that there is a suitable control framework around that at that cover holder, and making sure that the MGA has walked through and assessed that. And what's their control environment looking like? Is it something that we feel there's improvements needed, and how is that tracked? How will that be actioned and through to resolution? Or are we quite comfortable that it's actually robust enough? And one of the key things, as I mentioned on the resilience side, is as part of that cover holder due diligence, making sure that they have BCP plans and disaster recovery plans in place. And I guess one of the things really to consider is that proportionality approach, because you have some cover holders that are very, very small, maybe don't have that full framework in place. Depending on the extent of business that they write for you, how much assurance do you actually need? And then do you need to, agree that maybe at the board level, or set that as a risk appetite that you're okay with maybe them going down for X amount of days, or okay with, not having certain things in place. So all to be considered. The DA authority limits then also have to be defined as part of that, and that will be done with the binding authority agreements that are often in place. Those contracts that need to be up to date, they need to be maintained. Often we find that contracts are not really in date, and they do need to be updated, and you don't want to be stuck in that position, because if, for example, anything were to go wrong, performance wasn't up to scratch, or there was a problem with the whole resilience aspect of it, you want to be able to make sure that the liability is in the right place and people are held to account. So that is a really key factor, and we often find that with third parties and the cover holder arrangements, that that can be quite a challenge for firms to stay on top of, in addition to their BAU activities. The other element of it is claims activities. So have you given delegated authority to the cover holder in respect of claims, and the claim handling, and what controls do they have in place? Do they have the right level of claims authority if you're delegating that? Do they have the right loss funds, and what's the reporting around that? And is there ongoing monitoring around that as well? And then the adequacy of the reserving process, which goes hand in hand with that, and the ongoing communications, which is very, very key. Where there is a claims dependency, it is important to map that risk to any operational resilience dependencies that you have, and Priya will talk about that further in a bit later. But just really one of the key important business services that we tend to see across insurance firms and MGAs is underwriting claims, and then the reliance on maybe those outsourced services or even those cover holders that have that delegated authority. Then I guess all of that really as part of the framework is to be measured. How do you make sure that those cover holders that you've delegated authority are delivering in accordance with what you need to? So do you have SLAs in place against which you're measuring on a quarterly periodic basis? Are those cover holders reporting to you? Yes, usually they send through the bordereau, but in addition to that, are there any further reporting that really is required of those cover holders? If there's any performance issues, how are those being detected and picked up? What controls do you have in place to make sure that there are indicators and metrics in place to oversee that? And often, cover holder or DA oversight, delegated authority oversight can be quite poor, is what we tend to see. And it is frustration in the market because obviously you have multiple cover holders, you have a whole host of insurers or MGAs who are wanting the same information from the same cover holder. And it's just really, the frustration is we don't want to make multiple requests, but how can we ensure that we're getting the assurance we need without being too duplicative in information that's being provided to multiple parties? And then finally, the governance and oversight piece, which is very, very important in terms of, what's in place over cover holder performance. So it's not just that it sits with the CEO and the head of DA, but that it is reported to a governance forum, whether it be a delegated authority committee, whether it be the underwriting committee, and then eventually to the board. If there's anything that is really challenging or you're finding poor performance, or even, that it could lead to some form of disruption in your business, is that being picked up timely and is it being dealt with, and what escalation measures are in place to make sure that that is resolved? And often, how do you do this? We do cover holder audits. A lot of firms do cover holder audits, and that is a way to get in and actually check the control environment and see what's going on in that cover holder. But once those audits are done, then what happens with them? What happens with the results? Are those being rated? Are those being reported? And are actions being tracked? And then what's the root cause of some of those actions? Just making sure that that is then being addressed as rather than just being parked and just the audits just being used as a bit of a tick box exercise as part of this framework piece. So those I've run through very quickly some of those components in terms of the key components for a delegated authority framework, which, like I say, many of you will already be familiar with. But it is important to just have some of these in mind when we're talking about operational resilience, because every single aspect of it will somehow be linked. So then, oh, sorry, I'll just go back one minute. So then what's the risks of an ineffective delegated authority framework, and how does that link to operational resilience? Well, if we go through some of the key risks identified here, you might not be able to meet the deadline, for example, for operational resilience. They might not be met by the cover holder. So what do we do? Some of the controls is you have to make sure you take a risk-based approach and make sure it's proportionate in its application when it comes to the OPRES requirements. There are a lot of requirements that my colleague will go through. It's not always easy for the smaller to mid cover holders to meet absolutely everything. So it's got to be a proportionate approach. And that's something maybe, you can sit down with your cover holders and have a discussion about when you identify your key cover holders and the dependencies there. And is there a plan in place to include, current state and future plans for ongoing compliance? Are you able to work through with that in terms of op resilience? So there might be areas which you can think, goodness, it's just not going to be met. If you have a plan in place that you can articulate and maybe present, if a regulator was to come to you and say, right, we know that maybe this is a gap right now, we are working towards it, be able to show the working internally what you're doing, and then how you are then relaying that to your cover holders. It may be something that if you're able to show it and demonstrate it, that may be taken away and may be reasonable. And the approach really is ongoing communications with the cover holders. Often, firms don't always do this. Some do it better than others. But it's really important where you have those key dependencies to make sure you have those ongoing communications. You identify any gaps and what extent of compliance there is and what needs to be improved. The other area of risk is cost and insufficient capacity to meet all the requirements. Often operational resilience is an afterthought, and at the moment it's definitely forefront of mind because of all the regulatory expectations. And so in this sense, again, similarly on the proportionality approach, it's important to make sure that you have in mind that one size doesn't fit all. You have to take a pragmatic approach to what is going to be practical. And do these cover holders, or do you have your operational resilience frameworks in place that takes into account some of those cover holder methodologies and approaches? That is something, again, that is important to consider as part of your frameworks if you haven't done also already. And how can you bring those cover holder in? So, for example, often you might have a small MGA who has a framework, and they're running their stress and scenario tests and have a key dependency on a cover holder. How can you demonstrate you've got that linkage with the cover holder? Well, you might be able to include them in stress and scenario testing, and Priya will talk about that in a little bit more detail. And then it's important to identify the vulnerabilities and the dependencies and map them and document them. Making sure that you capture and map them is critical to be able to demonstrate that you've thought about those dependencies and what the mitigation strategies might look like when those dependencies may be called into question. So the approach again to that, developing a framework, making sure that there's key work stream components included. There might be limited capacity internally to do the work. Often we see our clients struggle because they have other things to get on with, and not trying to, put a pitch out there, but there is always the consideration of using external support. And we are finding from speaking to regulators and even Lloyd's market ourselves, that there is this notion of getting an extra pair of hands, independent pair of hands to help and support where firms might be struggling, and that is absolutely welcomed from them. And then also instructing SMEs to do some of that assurance work. Look at what you've got already. Is it sufficient? It may feel like it is, but it's always different when you get an SME involved to take a look with a fresh pair of eyes, who might then be able to highlight certain improvements or even sense some gaps, and then deliver and construct a plan for you with any outstanding activities that need to occur. And then finally, another risk, a big risk actually for this audience, I guess, is loss of capital if there is a insufficient amount of operational resilience in place or plans in place, and there aren't recovery contingencies, often from the capital provider, who might be quite interested in understanding, is your business resilient? We are backing it, we're investing in it lots. How can you show to us that you're on top of this? And the controls here being, again, the plan, the frameworks, all the various components in place, and the testing, which we'll come on to, and then ongoing testing and updates to that. So it's not just something that's done till the end of March and then that's it. This is not what this is about. It's about having to ongoing demonstrate that it continues to evolve as your business evolves, as your business expands. That's really, really critical. And then, of course, taking a risk-based approach to it, which is what I've mentioned before, and collaborating and leveraging where you can, if it's necessary, with others in the market, and speaking to peers and finding out about what they're doing as well is a good way forward there. Okay, so I'm going to now pass over to my colleague Priya, who will take you on to more about operational resilience for cover holders.
Yeah, thank you so much, Nosheen. Before we get into or delve into what is the requirement for cover holders in Operation Resilience, we wanted to make a quick introduction to what is Operation Resilience and what are the things that an MGA needs to do, or somebody regulated by FCAPRA needs to do. So if we go to the next slide, thank you, Nosheen. Might require your help in navigating the slides. So in terms of what is operation resilience, in a very simplified version, it is the ability to prevent, adapt, respond to, recover, and learn from an operational disruption. So for us, we look at flip sides of the same coin. So it's about active risk management. So trying to understand what are the inherent risks, and always, even if you treat them, you're always left with your residual risk, and also keeping in mind that the disruptions will happen, or keeping that sort of thought process and saying what is your response in case there's a disruption. So what does your recovery plan look like? And looking at the regulatory timelines, so we had a policy statement for operation resilience by FCA and PRA back in 2021. We had an initial deadline in 2022 where we had to cover some aspects of operation resilience, and then we are moving towards a final deadline, which is a 31st March 2025, to be completely operational and to be within our impact tolerances. So that is what operation resilience is in a nutshell. If we can move to the next slide, Nasheen, thank you. So in order to, and what does it mean when we say we need to implement operation resilience? Like, what does it really entail? So for any firm which is regulated, which has an operation resilience obligation, we have structured the program into 10 steps, and there are some words or some terms introduced as part of operation resilience. So for example, governance, we all know that there has to be a senior management oversight on to how we are developing our program and what does it mean, not only till 2025 but beyond. Important business services is something which is a bit different from your business functions, and it basically talks about any service that you provide to the customer that can cause intolerable harm to the customer or to the firm. So this is a bit different from our internal processes. It's a more outward process on what kind of services you're providing to the customer. We also need to map are important business services. For example, if you have claims notification as your IBS or an important business service, what are the resources, for example, people, process, technology, data, third party, that are required to be able to provide that service? And that's when cover holders comes into perspective as well. And we've seen mapping of MGAs where they say cover holders is a dependency for us to deliver a particular service. Impact tolerance again is not a new concept, but it's sort of something that is coined again in this particular regulation. It talks about not the harm or convenience, but the intolerable harm that can be provided, or that can be caused to a particular service. For example, if we do not provide a service to a customer or it is disrupted, at what point we will cause not inconvenience or harm, but intolerable harm. And the word intolerable harm is very important because it talks about not somewhere where we can compensate or we can, like we can make things okay. It's about causing irreversible loss to the customer or to ourselves. So that is the point of intolerable harm where we are setting the impact tolerances. So it should be a bit far out than what you would have seen in your RTOs and RPOs, because it is moving a bit further ahead in how we look at our services. Also, reviewing your business continuity and DR plans and making sure that is perfectly integrated with Operation Resilience. We do not want them to sit separately as a BCP world versus an ops res world. It's more about how we make sure that we integrate that and work together in terms of how are we responding to a disruption. Uh, Third-party suppliers, OSPs, MSP, is where we want to understand which are those third parties that support IBSs. Have we identified them? Which of them are critical? And what is our monitoring plans? And what is our exit strategy from them? Or have we tested them? And that is sort of a similar approach that we would be taking towards cover holders as well, which we'll go in the next slides. Identifying weaknesses. So once we identify what are those IBSs, what are the resources that support those IBSs, this is the impact tolerance. So maybe it could be 2 weeks or 4 weeks, for example, for a claim notification. But what are the weaknesses? What are the single points of failure that will actually single-handedly not let us deliver a particular IBS. So it could be a technology, that could be a single point of failure, it could be a third party, that without that, it's very difficult for us to deliver our important services. So it is very important to identify those vulnerabilities and have a risk treatment plan against them to make sure that we have a plan or a response plan to be able to mitigate that risk. And stress testing, which has been a very interesting point for the regulators for Lloyd's, is trying to understand what are you doing in terms of testing those vulnerabilities and testing scenarios to make sure that you can demonstrate that you can stay within your IBSs. So by 2025 or March 2025, you will not be able to test everything. Uh, but it will help us sort of understand what is the maturity looking like. We need to have a test plan, and we need to make sure that Operation Resilience doesn't stop at March. It actually goes beyond it, and we will keep testing and making sure any new changes in our horizon in terms of internal and external changes reflects in our Operation Resilience, and it is tested to make sure that do not we make sure that we do not breach our impact tolerances. I had a chat.
Sorry, Priya, if I may, we just had a quick sort of clarification. When you reference IBS, that's an acronym for Important Business Services.
Absolutely. I was
Okay,
just going to
thank you very much. Thank you.
yeah. Um, and in terms of continual improvement is about talking not only right now, but what does your continual improvement process towards resilience look like? What are we going to do annually? So this is not going to stop on the 31st of March. There's going to be an annual review of your important business services, of your mapping, of your tolerances to make sure if anything changes, it is reflected. There'll be continuous stress testing, continuous identification of vulnerabilities/weaknesses, and making sure that there's a recovery plan in place or response plan in place. So this is not going to be over as a project in March. It's something that will be integrated to how we work towards resilience. And self-assessment, so any MGA who is regulated by FCA and PRA needs to have an annual self-assessment, reporting about all of these areas within their Operation Resilience program, and they need to get board level assurance that we are comfortable with where we are in our resilience journey. So these are the sort of areas that we look at. Now, what does it mean in terms of cover holders? So obviously this is everything who is regulated by FCA, PRA needs to do as part of their framework. And Nashid, if we can move to the next slide. Okay, so Operation Resilience and cover holders. So we have seen typically there are underwriting claims and complaints, as Nasheen was saying, that is where we see cover holders being highlighted as where they support the MGAs. And if you look at in underwriting, there is new business, midterm adjustments, renewal, there could be FNOL, claim adjustment, payment or complaints. Now, when you have been identified by an MGA as a cover holder that you are a critical provider for one of these services, what does it mean that you have to do in turn? And that means that we need to assess the service that we provide on behalf of the insurer. So we need to understand which IBS are the ones where we've listed as a critical provider or critical resource. Determining the nature of product that we apply. So what is our client base look like? So for example, if you're providing only commercial stuff to your insurers, it's very different from supporting or providing for individual customers, because for individual customers we can cause more intolerable harm. So it's just trying to understand where you sit in terms of how sensitive the the product is where we are providing these services. Uh, Understanding the resources that you have to deliver those IBSs. So what is the technology, people, data, third-party premises that are required by you as a cover holder in order to provide those IBSs? Identifying any weak areas. So what are my single points of failures? Or what are those non-substitutable resources that makes me less resilient? So trying to understand those weaknesses in the resources that helps you provide these services, understanding what kind of harm you can cause. So intolerable harm, what does that intolerable harm mean for you? Can you cause irreversible loss to the customer? Can you cause maybe harm to a small and to small, medium or enterprise in terms of they can go bankrupt? So where are we heading to in terms of extreme? Like what is the intolerable harm that you can provide or you can get to that customer? And understand any, like how many disruption can be caused before any harm is caused to the customer. So what is the level of disruption or shock that we can cater to, but what will lead us to actually breach our impact tolerances? So to understand where we are in terms of our resiliency journey and where we need to get to. Yeah. And just going to the next one. Next
It's
slide.
just, sorry, Priya, I just think it's also worth just
Please.
mentioning that insurers, where they've delegated their activities to cover holders, retain that responsibility for the IBSs, which can often be overlooked because it's more like, oh, have they also delegated the liability to the cover holders? Might be worth just considering as well.
Yeah, yeah. And if we, so in terms of what is the ask of the cover holders, or typically the ask of the cover holders, as Nasheen said, it is the responsibility of the MGA to maintain their operation resilience. It is their responsibility to make sure that they remain within impact tolerance. But what would they typically ask a cover holder to do or request them to do? The first one being responding to information requests. So you might be seeing some information requests coming from your MGAs asking about what are your important business services, what are your internal processes, what is the point of intolerable harm, when is the point where intolerable harm would occur, what is the maximum service outage, and how can you recover from that? And those questions we've taken from Lloyd's. So Lloyd's had come up with a guidance on operation resilience from um, DCAs and cover holders, and this is what Lloyd's think would typically be asked as part of this program. Contributing towards MGA's understanding of harm as well. That is very important. There will be an annual reviewing and maintaining of the information provided. So there will be trying to understand what your crisis response plans are, what your business continuity plans are, how are you maintaining and reviewing them, are we still resilient? Understanding there could be an audit to give assurance to them that we can stay within our impact tolerance, along with our, if we have some very critical cover holders as well. And one of the key asks that we expect from your MGAs would be participating in the stress testing. So as we saw a lot of feedback, as Nasheen was saying, we've been helping some of our insurers respond to feedback by the regulators as well as Lloyd's. We've seen they've been asking that, have you tested your IBSs with regards to your vulnerabilities? And if you have critical third parties, critical cover holders, have you involved them in the testing? So as we see the market right now, people are more sort of working towards the framework and doing those first, second rounds of testing. But the expectation is that as they mature their testing over this year, they will involve more cover holders to come and participate in them, to understand how will the recovery take place if there has been a scenario, and looking through testing of their BCP, their DR, and their crisis management plan, and how will cover holders assist in setting up, and testing these maximum service outages and testing the impact tolerances. So the expectation is going to be in these areas is what we envisage, to make sure that we provide enough assurance to the MGAs, providing enough assurance to the regulators. So by extension, all cover holders or all critical cover holders that come across in the mapping as somebody that supports IBS services and are single points of failure will sort of by extension come into scope for that.
Okay, well, thank you both for a very, very insightful presentation, and obviously there was a lot in there. We do have a question. I've got a couple myself actually. So first of all, do all cover holders automatically come into scope if the insurer identifies that they provide an IBS? If so, does this have any overseas reach for the cover holders?
It's an interesting
So
question. I mean, sorry, I can make a comment on it, and then Priya, you can also input. I think if you identify as your important business service the dependency on that cover holder, it's just like a third party. If it's a critical cover holder or a critical third party, in essence, it will apply to them. So you kind of need to understand their control environment and their resilience because you have such a dependency on them, and that's regardless of where they're based. That's kind of like the thinking around it. So it's because at the end of the day, it's your customers that will be impacted, your clients that will be impacted, and your business that maintains the liability. I mean, Priya, I don't know if you want to add some to that.
no, exactly that. I think if you are identified as a critical resource to providing an IBS, and no matter where you've based, we have to go through the process of trying to understand what the information request is, what the testing is. So there will be a series of things that we talked about that would minimum need to be done in order to give that assurance to the MGA and then by extension to the regulators and Lloyd's.
Okay, thank you. We've certainly got time for those on the webinar for more questions, so please keep them coming. One from me, if I may. So at one of our conferences, I think it wasn't last year, it was the year before, Matt Brewer's made the comment that if he had a concern around MGAs, it was around operational resilience and what happened to customers in the event that if the MGA lost capital and couldn't find replacement capital. So when you look across, your 10 steps, etc., where would you place that in regard to importance, and what sort of advice would you give to MGAs in terms of how they can ensure that they protect those customers in the event that they can't find alternative capital?
So in terms of loss of capital, so when we talked about impact tolerances and point of intolerable harm, we are talking about impact to the customer and also impact to the firm. So there will be set of like sort of two impact tolerances on how we impact to the customer. So what is the point of intolerable harm? And the loss of capital will come at a point where there'll be impact to the firm and where we will not be able to replace capital, and that is where it sort of sits. So when we identify that beyond 4 weeks, if we are disrupted, we are going to cause impact to the firm or to the customer, and then we work towards those impact tolerances with our response plans and recovery plans to make sure that we do not breach them. So that is where it sits. I don't know, Nosheen, if you want to add something to that.
Yeah, I think that's absolutely right. I think, you kind of have to put it in that context where, exactly what Priya is saying is from a firm point of view, can we limit the amount of impact this is going to cause to the business, and is it going to go into the realms of we could lose capital on this because we're not able to. And so you have to have your resilience plans in place, you have to have your backup plans in place, and then I saw also an assessment of the impact that will have on your customers, because it's going to have a knock-on domino effect, right? So it's really, there's a lot of interlinkages in this and a lot of mapping and considerations that firms have to do. And I think it will become a very evolving thing, to be honest, definitely for the Lloyd's market as well, as things pan out. But these are definitely some of the things that people should be thinking about.
Okay, thank you. Another question. At what point might an insurer judge one of its MGAs to be at a point that it is relevant to the ops res regulations?
So operation resilience regulation applies to all to all financial services that are regulated by FCA and PRA, and that includes all MGAs and like banks and asset management. And I'm not sure if that is where we are alluding to.
Yeah, because
Where,
you could have a cover, for example, you could have a cover holder that's large enough and that is FCA and PRA regulated, for instance. So it would absolutely be applicable to them. So
yeah.
then the insurer will need to understand what their OPRES framework and plans and tests and all of that, all of the things that would apply are. And then also, I guess the second element of that is if that insurer deems that cover holder to be a critical cover holder for their business. So for example, if that cover holder is writing, I don't know, say 60, 70% of your business, that's pretty critical. So you kind of need to either ask them or say, what controls do you have in place? And they could be a proportionate approach you're taking, or at least ask the questions through that request for information, through the audits you do, and include that within the scope of your performance monitoring on those cover holders.
Thank you. Another question, just basically on obviously the content of your excellent presentation. This will add a lot of duplicative requests to entities such as DCAs that provide outsourced claims handling to many insurers and managing agents. What are your thoughts on the options for coordination of the inevitable duplicative requests? A great question.
That's a very good question, and that's been in the market for a long time. When you get these flurry of messages or flurry of requests, how do you handle and maintain that? And that's why we've been working with so even if you're not regulated by FCA and PRA, but you're working with MGAs who are, it is very important to understand your operation resilience and the key questions that we put in our last slide, to actually have those ready and have a bit of a standard response. So we've helped some of our cover holders and DCS to actually come up with those standard responses, to have some of the audit points ready as well, so that when you tend to get barged in with so many requests, there is a coordination and you can give them most of the information through those, because we have gone through the regulation and we understand where we will be applicable. So we give them a standard response in terms of all the questions, and anything additional is then that we can cater to. But yes, there is a sort of a notion, or there is a sort of thing in the market where we are seeing that this will be something that will be coming to the DCAs and to cover holders with a lot of requests. So it's very important to have your framework aligned and ready.
Okay, can I just pivot back in regard to proportionality? I'll come back to that later because one of our members has got another question actually. Is there a framework template you can share?
Yeah, so if we go to the 10-step structure that we talked about, so that is everything that you need to do from an operational resilience perspective. So but if you are a cover holder and if you come as part of mapping, as you support an important business services, it is very important to go through 4, 5, 6, 7, 8, 9, 10 to understand what your impact tolerances are, what your MSO are, to understand what are your recovery plans, to understand if you have any third parties or any, like what is the resilience that you get from them, to understand your weaknesses, to stress test internally as well. So for example, if somebody comes back to you and says, I want you to participate in our stress testing, we cannot participate in, 50 to 60 requests, right? But if you have stress tested and you have a good resilience plan that can work for some, and they can then demonstrate to the regulators or to Lloyd's that yes, our cover holders have actively done this, and that is why we are comfortable that they are resilient. And it could be, and by self-assessment, you do not need to, if you're not regulated, to have an annual self-assessment as a requirement, but it is a good thing to have, where you can actually demonstrate to your MGAs that you can remain within impact tolerances based on the assessment that you've done. Yeah.
Okay, thank you. Yes, so just where I was pivoting back. So, you touched upon in your presentation quite a bit around proportionality, actually, and MGA cover holders come in all sizes. Some can be sort of monoline, some can have multiple lines, etc. Can you sort of share a little bit on your own experience about how flexible, in particular, capital providers are in terms of deploying that proportionality? Or, again, I know Nasheen mentioned one size doesn't fit all, but I think some of the dangers for sort of MGA members, in particular, is that, doesn't matter about their size or their product suite, they will still be expected to meet something who might be writing $500 million of premium income, as if they're actually writing 25 or 50 million. Could you give us your views and your own experience on that, and how you would recommend MGA members sort of address that?
Yep, I will start that discussion. I'll let Nasheen sort of jump in terms of proportionality. So from our experience, we've seen insurers and cover holders have lengthy documents and have projects running for like as long as like 12 months or 13 months in order to get a handle on all of these areas. But something can be done a little bit more quickly also. So depending on the size of the organization, the kind of service you're providing and the culture, you can sort of proportionalize it in a way that we just talk about the key things. So for example, an exit planning or a stress testing um, could be like a weekly process, or it could be a monthly or a quarterly, but it's very important to understand where we sit in terms of our size and complexity and put that in the right order. Identifying vulnerabilities could be depending on if you have a lot of change projects going on. That is something that will take a lot of our time to go through. But actually, if we are not changing so much, if these are the services that we provide, we are a limited size, we can actually do these things a little bit more quickly, but having the right framework in place. So framework is important, and then that sort of leads on to the implementation. But we've seen 2 months to 12 months people, like implementing it constantly versus something that can be done in a more sort of proportionate with lesser documents, but more approach centric ways. I don't know, Sheen, if you want to add to that.
Yeah, I think, to your point, Mike, it's about, yes, it is absolutely proportionality, but for any organization that's providing these types of services, whether it be a small, three-man band to a, multi-billion dollar company, there are going to be all of these key elements that as part of their business operations, they are going to want to meet. And that includes, having good governance, identifying what are our important business services that we provide to our customers, who are we dependent on? Do we have recovery plans in place? So they will all be applicable, but to a lesser extent, to Priya's point. And I think the lesser extent part is as long as you are able to rationalize why certain things won't be applicable to you, or if you're able to demonstrate that your business model is such that, certain requirements might not, it's not the requirements may be applicable, but maybe the size of your firm doesn't vouch for, looking at, I don't know, multiple third parties who might bring your business down or whatever. As long as you can rationalize that, document it, and again, document, and, that is kind of agreed at a governance level, then you're able to present that to a regulator or to Lloyd's. That really should be sufficient. I mean, there still may be some areas where they'll have some questions, but that's just going to be an ongoing conversation for you to have. Hopefully that kind of gives a bit of context.
Thank you. A couple of more questions. So yes, someone's asked for access to your slides, which they will be available. So thank you very much. The other one, ladies, is the operational resilience of each firm expected to be audited or scrutinised? And if not, is there a risk that important factors could be overlooked?
So in terms of auditing, they need to submit a self-assessment every year. That is to demonstrate the resilience journey. Yes, auditing is something which is not set up as a requirement. We've been asked this question before. It's not set up in the policy as this is required, but because 31st March is the deadline, we are expecting auditing or sort of assurance given from that area to make sure that as per the regulation, we are in line with our Operation Resilience program, and we are meeting. We've been helping with those assurance areas as well. But yes, this year it's part of the audit plan in most firms, but it's not a sort of written requirement, if that makes sense.
Yeah, agree. And I think as part of, in respect of cover holders, if you have cover holder audits, what you might want, should be a consideration is I guess, including some of the scope areas of operational resilience within the cover holder audit scopes, because obviously the audits it touches on so many different aspects of the organization, and it's probably going to be good practice, I would say, going forward to include just some of the key questions that Lloyd's has given out to consider for cover holders.
Okay, thank you. Give a couple more minutes. So, any more questions from attendees? Okay, so look, let me then sort of pass on everybody's thanks to Grant Thornton and their presenters for. No, I just thought I might see another question in there. Is not. So many thanks for a very, very insightful presentation. Clearly, it's a very, very important sort of aspect of what we do, as a community. There's an awful lot in there. We can see that. I think people have really invested in terms of the slides, and I think the key around proportionality, which you sort of kindly answered, is very important, and I think that's an open dialogue with their capital providers around that proportionality, because there obviously is a concern, as you mentioned, Nosheen, around other areas of regulation that, again, people will be saying that we want to try and get on writing some business as opposed to sort of doing all regulations. So I know members will look at that. So look, thanks very much again. Just before we finish, I'd just like to remind you to complete our feedback survey, as your views are extremely important to the team. And just in closing, I'd really like again to thank Nosheen and Priya for a very, very insightful presentation on an extremely important topic. So thanks very much indeed for taking the time. Thank you.